Ladies and gentlemen, good day and welcome to the Q1 FY22 earnings conference call of PI Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I would now like to hand the conference over to Mr. Nishit Solanki from CDR India. Thank you and over to you.
Thank you. Good afternoon, everyone, and thank you for joining us on PI Industries Q1 FY22 earnings conference call. Today, we are joined by senior members of the management team, including Mr. Mayank Singhal, Executive Vice Chairman and Managing Director, Dr. Raman Ramchandran, Managing Director and CEO, Mr. Rajnish Sarna, Joint Managing Director, Dr. KVS Ramrao, Executive Director, and Mr. Manikantan Vishwanathan, Chief Financial Officer. We will begin the call with key perspectives from Mr. Singhal. Thereafter, we will have Mr. Manikantan sharing his views on the financial performance of the company. After that, the forum will be open for question and answer session. Before I begin, I would like to underline that certain statements made on the conference call today may be forward-looking in nature. A disclaimer to this effect has been included in the investor presentation shared with you earlier and also available on the stock exchange website. I would now like to request Mr. Singhal to share his perspectives with you. Thank you and over to you, sir.
Yeah, thanks, Nishit. A very good afternoon to everyone. Once again, I'm very pleased to address you all and hope everyone and your families are keeping well and healthy in these challenging times. Now, let me start with PI. I think PI yet again has delivered a strong improvement in performance in the first quarter for the year 2022, despite the significant COVID-related challenges that we've always been witnessing during this quarter. The revenue increased by 13%, EBITDA up by 8%, and this PAT depicted a growth of 29% over last year. Now, coming to our CSM business, it's continued robust growth momentum with a 31% year-on-year growth. We are looking at 6 new molecules to be commercialized in the coming year, where in addition to the capacities commissioned in the previous year, we will commission a new facility in the present quarter. The momentum of inquiries and order book build-up has been encouraging, indicating a robust growth in the coming years from new commercializations. During the quarter, I am again pleased to share that we have indicated new relationships with new customers in electronics and other fine chemical, specialty chemical domains. Our existing portfolio has grown sizable and continues to ramp up further in line with the requirement of the innovative partners, higher throughput creativity by us and continuous capex. The domestic business, on the other hand, as growth was subdued due to the combined high base over the previous year, which had grown in the previous year by 50% year-on-year, delayed onset of monsoon in the key cropping regions, deadly spread of the COVID-19 during the quarter, particularly in the rural areas, which impacted the sentiment for farmer distributor channels. However, the COVID situation has since improved, and with the monsoon forecast coming to normal by the coming months, the remaining period we see an improvement in the demand in the consecutive quarters coming ahead. We have 3 new products lined up in Q3 with rice, cotton, and horticulture portfolio. We have the strongest portfolio of horticulture in the country and are confident of having a strong growth. Q2 will see a product transitioning to new packaging that will add efficiency and enhance branding in the customer mindset. In a simulation of Isagro domestic operations into Jibago, with a comprehensively enhanced our hold within India in the horticultural brand. The upcoming season will see PI lend its experience base of innovation and agility onto the field through the application services offering where we do, by design, we set out to address specific farming challenges. And such initiatives will incorporate novel technologies and methods of communication and more deeply to deliver efficiency of process and cost to our solution. It remains our stated objective to diversify our technology basket. The new research facility which we are developing will further augment our efforts in this direction. I would like to share that we have made marked progress under our product research initiative, as well as 2 promising leads have emerged. One being a novel fungicide, other being a novel broad-spectrum insecticide. They continue to allow the global innovators to tap an opportunity in these initiatives, making PI one of the first in this arena in the Indian landscape. Coming to other strategic initiatives, I'm very pleased to share that last week our board approved the acquisition of the API and intermediate business of Institute Laboratories, in line with a long-term objective for diversifying into adjacencies and building the next level of next growth engines for the organization. This acquisition will help us build a differentiated platform in the pharma value chain by combining a technological product pipeline and leveraging the competencies across the complex chemistry and operation and commercial excellence, expanding the global research and large innovative partnerships for delivering solutions. As you see, the specialty chemical has emerged as a high-growth opportunity for Indian domestic companies. With this benefit of robust domestic consumption, large chemistry capabilities, and favorable geopolitical scenarios, we are seeing a growth momentum in the Indian industry, which has significant potential to improve the market share in the global opportunity. PI's strategy and approach has matched its client's aspirations and the development of both research and the powerness of manufacturing profile, which is concurrent to the scaling up of a partnership with global innovators. This is inherent predictability for upside in our approach, and we are in there for the long term. Our aspiration to develop a diversified business mix to target much large global opportunities in the fine and specialty chemical space with a differentiating technological approach so that we can sustain the growth momentum for long periods of time. Proposed acquisition is the first significant step in this direction. I have covered the key perspectives that I wanted to bring to you, and now I would like to invite our new CFO, Mr. Manikandam Vajanathan, to lead the conversation with views on the delivery improvements in the financials. He brings to PI a long tenure of experience in the fields of finance, having worked with groups like Reliance, Scottish, and other large industrial groups. And his journey of PI will strengthen our bandwidth for efficiency management and growth journey of PI. Thank you, and over to you, Mani.
Thank you, Mayank. Good afternoon, everyone, and thank you for joining the call today. I am personally delighted to join PI leadership team. Just to give my background, I am a chartered accountant with 30 plus years of experience across large conglomerates. Prior to this, I was associated with Rosari Biotech as their group CFO. With my exposure and experience, I am confident that I will be able to contribute and be part of the growth journey, PI's growth journey. I would like to share financial highlights for the fourth quarter of the fiscal year 2021. All comparisons are on a year-on-year basis and consolidated. In Q1 FY22, we registered 13% revenue growth at rupees 1,194 crore, driven by over 31% expansion in some exports at rupees 807 crore, supported by strong volume growth in key products. Domestic operations reported some moderation in performance due to higher base of the last year and delayed onset of monsoon. Domestic revenues stood at 387 crores in Q1 of FY22. On the profitability front, gross margin increased by 1.7%, supported by favorable product mix in the domestic operations. EBITDA enhanced by 8% to rupees 252 crores, translating to an EBITDA margin of 21%. Moderation in margin was as a result of 26% increase in overhead cost relating to one-time expenses pertaining to COVID management, as well as consulting fees and other costs pertaining to several strategic initiatives and projects. Profit after tax improved by 29% year-on-year to rupees 187 crores, led by reduced effective rate during this quarter. Strong performance during the quarter further strengthened the balance sheet of our company. We generated operating cash flow of 250 crores in Q1 FY22. Further, we tactically increased our inventory position to cover ourselves in case of any supply disruption due to COVID. Overall surplus cash net of debt stood at 2,193 crores. We look to fund the acquisition of the API and intermediate business of Institute Laboratories Limited of 1,530 crores from the proceeds of completed QIP and internal accruals. Let me also share some details about our capital expenditure. Our capex outlay for Q1 FY22 stood at 71 crores, and we remain committed of spending close to 350 50 crores in the current fiscal year to support our growth momentum. We remain positive on the robust outlook across our business verticals of domestic as well as exports, backed by solid visibility to support the momentum, and now pharma, which we look to integrate this year, subject to fulfillment of customary closing conditions and regulatory. We would also wish to maintain our original guidance of about 15% of revenue growth for FY22. This concludes my opening remarks. Now, may I request the moderator to open the forum for Q&A. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Also, we would like to request participants, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up. We will wait for a moment while the question queue assembles. The first question is from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Hi, thanks for the opportunity. So a couple of questions. One, wanted to understand the acquisition that we have done. The sites belong to the northern part of India, while if one were to see, the pharma API intermediate companies are situated in Andhra Pradesh and that belt around Telangana. What gives you a strength or a scope of excitement to acquire some assets at the northern part of India?
Sorry, your voice is not coming clear. Neither you could get your question because it's very muffled.
Oh, sorry, I'll just repeat, sir. So considering the current acquisition that we have done, which is closer to the Andhra Pradesh, northern part of India, while if I were to see the API and intermediate industry per se is largely situated in southern part of India, what kind of distinct advantage we are seeking while acquiring these assets, which is situated in northern part of India?
Yeah, thanks for this question. So, for us, primarily the criteria for a suitable target was based out of the quality of assets that this company has, the kind of regulatory approvals that this company has, the product portfolio, the pipeline of products in R&D, and these kind of criteria, not necessarily that locationally where this company is. So we have found this after spending reasonably good time in evaluation of number of options that we were evaluating, we found that these criteria or these requirements that we had were getting met by this particular option, and we were also kind of able to clearly assess that what kind of additional value that we can also create, what kind of synergies and additional values that we can create by combining our strengths and portfolios and all. And we found all that getting met in this particular option, and that has been the clear basis for our decision.
Right, sir. Second question is pertaining to the IndSwift acquisition. How does it fit in the long-term plan of us getting into pharma cramps kind of business? I believe IndSwift is largely still doing generic kind of business.
Yes, so IndSwift current model is generic products, although they are in a leadership position in many of these products that they are dealing. But apart from that, they also have a relatively smaller CRAMS business piece, and our idea is to gradually grow that business, look at opportunities that we have with PI in our pipeline, and also exploit more opportunities that are in pipeline of ISLL in terms of CDMO. So yes, the longer term objective will be to further grow and make that a sizable component of this overall business.
And strategically, so PI will use its R&D skill and InSwift will provide the manufacturing platform. Is that the way to understand?
Can you repeat? Your voice is not very clear for us.
My bad, sir. So, if I were to understand, PI will provide the R&D related skill sets, and InSwift will provide the manufacturing platform. Is there is this the best way to understand the acquisition?
Well, InSwift also, ISLL also has their own R&D. There are more than 150 people, chemists. They have a very good setup, R&D setup. Our point is that with our technological capabilities and our strength in R&D, we will further strengthen this overall R&D in pharma, and expedite the pipeline that both the companies have. And in addition, they have a good set of assets, more than 26, 27 manufacturing blocks and other capabilities. But there also we will, through, and we can certainly leverage our operational excellence capabilities in chemical, large chemical plants and scale-up. And by combining these capabilities, we'll be able to create much bigger value. That's the whole idea.
So if I was to add, if you were to look at the bucket, PI strengths obviously in the capability of global business, develop concepts in the areas of technology, chemistry and process capabilities, followed with the growth, compliance and regulatory framework. Added with the requirements of pharma, which come well with the IFL, highly credited facility, coming with all the regulatory approvals, with no challenges on that front, with quality infrastructure, having demonstrated history and credibility which already exists. Obviously, the challenges come with the generic portfolio, with certain pieces in CDMO. Clearly, with PI's competent leadership backed with the pharma knowledge ability that we've already accumulated with leadership in our organization and our technical capabilities, we plan to combine these to lever to create a different level playing platform to differentiate ourselves in the pharma space in the next 3 to 4 years. And that's really where things are moving in that direction. Yeah.
Excuse me, this is the...
And this is just a step to accelerate the process for us to make a larger impact in the pharma place.
Mr. Gosar, may we request you to come back in the queue for a follow-up, please? Thank you. We would request participants to please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up. The next question is from the line of Utsav Mehta from Edelweiss Asset Management. Please go ahead.
Hi, good afternoon. Am I audible?
Sure, yes.
Hi, good afternoon, sir. So 2 very quick questions. One is that InSwift, if you look at their current business, it's a business that's operating at extremely high working capital, almost 300 plus days, very low asset turns as well. Also, there is also an element, if I'm not mistaken, where I think promoter-related entities own almost 290-300 crores of receivables to InSwift. So could you just provide some sense on whether this working capital can come down back to some levels at which PI currently operates, and does the acquisition value also include this 300 crores to be returned back to InSwift?
Yes, so thanks for the question. Yes, certainly, currently InSwift is operating at a much higher, working capital level. As we all know, they were passing through financial stress, and they had their own reasons of, operating at these levels. And obviously, once PI acquires, we'll certainly be managing the business as per the, normal working capital norms, which is certainly, anywhere between 25% plus or around that, 25 to 30% around that. And therefore, we will certainly, in a quick time, we'll be able to kind of bring down this working capital levels of this company to near optimal. Okay. In terms of our consideration, yes, I mean, there is a normal working capital which is part of this consideration that we have indicated. As usual, the acquisition price consists of the normal working capital, which is certainly not this old doubtful debt or receivables or related party items, but yes, there is a normal working capital level which is part of the consideration.
Okay, so this money basically will be sort of considered written off when taking over the business. That's probably correct, right? It is just this won't be transferred over. Okay. And my second question is, as you go about cleaning up some of this business, making it lower working capital, more profitable, do you believe that this IndSwift top line of 850 crores will need to be reduced and some of the more unprofitable business sort of need to be stopped before you can start growing the business again?
Well, whatever assessment that we have made, obviously we'll be making more detailed assessment, but basis our assessments so far, we see a lot of, unexploited opportunities to even grow their existing products. Maybe not all products, but to many of their products, there are unexploited, growth opportunities, which we will certainly kind of try and achieve by commercial excellence on one side. And on the other side, yes, as we have also tried to articulate in our release, that we will certainly strengthen this product portfolio by combining our own product pipeline that we have been able to build and identify over the last couple of years through our efforts in pharma space. So by combining these two, yes, I mean, ultimately the business has to run as per the financial parameters and other strategic parameters, be it asset terms or working capital terms or improved margins and all, and these are going to be obviously the clear guidelines and threshold for us to kind of grow this business from here.
Thank you. The next question is from the line of Abhijit Akela from IIFL Securities. Please go ahead.
Yeah, good afternoon. Thank you so much for taking the question. First, just a question on the CSM revenues this quarter. They seem to have fallen on a sequential basis to about 800 crores compared to 1,000 crores last quarter in 4Q. So, any color you could shed on what's driving that, and should we expect this to come back to the fourth quarter run rate starting next quarter?
Well, CSM, although not as seasonal as we see in domestic, but it's still, it is driven by the season, global season. So it is not that, revenues are, distributed equally across all the 4 quarters. There is a, slight increase in the second half, and particularly by the end of the year, given the, inventory plans or business plans of the customer companies. So yes, I mean, if you see year-on-year growth, there is a decent growth, more than 30%. And then we expect to kind of, on year-on-year basis, we expect to still achieve the growth in subsequent quarters, not necessarily on a sequential basis.
Okay, got it, sir. And the other thing was just on the guidance that we have provided for fiscal 22, this 15% plus growth guidance. Is that excluding the acquisition, or how should we think about that?
Yeah, that excludes acquisition. I mean, this guideline was primarily for our organic growth.
Okay, fine. Thank you. I'll come back in the queue.
Thank you. The next question is from the line of Ritesh Gupta from Kotak Securities. Please go ahead.
Hi, sir. Thanks for taking my questions, and congrats on a great acquisition, actually. Just wanted to understand a bit in terms of how you see the opportunity in terms of your own pipeline. I mean, if you have talked about your own pipeline, but let's say what kind of areas that you are focusing on Is it more on the intermediate side? Is it more on the APIs which are turning generic in the near term? Or let's say the focus is actually to go and cross-sell it more as we go about? I think that's the question number one. And the second question is just wanted to check on the CFO resignation. I mean, there have been a couple of them not couple of them actually, but yeah, I mean, we have seen multiple resignations over the last 6-7 years. So could you just give us a sense on what's the thinking there and why there have been so many changes?
Yeah, so I think on the CFO front, obviously the incumbent who was there had a certain work to relocate to. Then he had certain locational challenges and also the weight and expansion of work. So he decided it was as good CFO, and he decided to step down. And Mani, in any case, was a part of the plan to join in, which has now been inducted, and so we are in that process. This is something that. Thank you.
Sure.
And coming to your first question, Ritesh, I mean, currently we will not be in a position to give very specific answers, which are the kind of products that are in pipeline and what kind of growth that we would expect from them. But yes, alongside the closing of this transaction, we shall certainly, come back with a very detailed commentary that what are the areas that we are focusing, which are the molecules or products, both on intermediate side as well as on API side, from the combined entity that we will target in next 2 to 3 years for scale up and to accelerate the revenue.
So if I were to answer that, we look at two-pronged strategy. What is that new comes in, and obviously as it has a gestation period, and already, as you know, that some of the products that they already have strengths in, they have leveraging capability. How do we further strengthen them and bring in our technology abilities to really create leadership position from a global level for some of them? That's the two-pronged strategy that we're working, the short and the long. Yeah.
Sure. And I don't know if you've discussed this earlier in the first few minutes of the call. You talked about 2 discovery stage molecules. So, I mean, what's the plan there? How close it is to commercialization? Could it be many, many years ahead? And you have also talked about some of the innovator partnerships that you're looking at. So, if you could just give us some sense there as well.
Yeah, so I think this is a great enterprise for the company. As years and years we've been talking about investment in R&D, with the amount of investment in R&D. I think today the company has been able to come out with 2 innovative molecules which can be globalized. The first Indian company to bring innovative products to the world markets. Obviously, this is right now at an early stage of development. And we, again, here, our philosophy, given that of a partnership approach, are going to be looking at the co-development across the globe with global innovators as partners who could support in the development activity across the world. And that's where we are. So it's a good moment of pride. Again, a good show of PI's ability in the research capability at the global level and the business backends.
Sure, sir. Thank you so much for taking my questions.
Thank you. The next question is from the line of Rohit Nagraj from MK Global. Please go ahead.
Yeah, thanks for the opportunity and congrats on the acquisition. So the first question is again on the acquisition front. So in terms of the business, how are we looking at the integration benefits over the next maybe 2 to 3 years? And whether the same team will remain there and spearhead the business, and are there any performance-related payments on the acquisition? Thank you.
Yeah. What do you mean by the clarity? Sorry, what do you mean by the same team remain there?
I mean, do we integrate the current team, or there will be some team which will we let go of because of the integration?
I think that's a separate vertical as you see pharma. The skills are there. So that current team continues to remain. Obviously, we will augment the team with more resources to develop the future strategies. As you know, the management, which is owner-driven, is stepping out. So we'll be bringing, we already are in the process. We have already got some. We'll be working to build a robust team to actually drive their business for the future. So we very much will integrate on the members of the team which are there as a part of our play.
And this business is getting acquired along with the existing team, So they have some close to 1,600 people on a permanent basis, and they'll be part of this acquisition. So they remain the part of this new entity, and further strengthening will be done on different leadership levels to kind of drive the growth of this new entity.
Right. And any sizable integration benefits that we are looking at?
Well, as I said to the earlier participant, that we are in the process of, kind of putting together. There are obviously initial assessments done, but as part of this next couple of months exercise, we will be certainly kind of clearly defining these things, and alongside closing, we shall come out with more details.
And we must also explain that, please appreciate that this is a different business. It is not has a lot of synergy with the existing, and pharma needs a different approach in management. So the more and the further we are investing to grow this business and develop. So the benefits would be more from learning capabilities, which for the larger general approaches which we have here, and investing in that to build that business up. That's really where I so don't see much of integrated benefits, as there are different verticals which will run in a different way, because the business requirements are different without there in ag and what is there in pharma, and more so from a regulatory perspective too.
All right, got it. So the second question is in terms of the QIP money. So we have invested about 1,500 crores in this acquisition, and we are still left with about 500 crores of money. So are we looking at another inorganic opportunity in the future? Thank you.
Yes, so we will continue to kind of keep looking and evaluating more opportunities on technology side and on other areas that we have identified for ourselves, which are in line with our long-term strategy. So yes, we'll keep evaluating, looking at opportunities. Besides this, we also have our organic growth plan. So yes, we will be looking at overall cash kitty, both QIP and our internal accruals for these subsequent initiatives that we'll be taking.
Yes, so I think the initiatives will be based on our strategic direction, and anything which is fitting our competence, capability to look at, and in alignment to our objectives, we will look. And I think timing is critical based on where we are and what we are doing. So very clearly, growth is a clearly defined objective, and growing smart is the way of life for us. So keeping those two in mind, this will always be a part of our plan.
Thanks for the clarification and best of luck, sir.
Thank you.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Yeah, the first question on the acquisition. Philosophically, I would say acquisition must meet with three criteria. One, that it must create value of its own, and its economics must make sense. Second, that the company to be acquired, we should be able to add value so that it's more than what we've acquired. And third, that what has been acquired should be able to add a value to what we are doing in our existing business. So if you agree with these framework, I would like to have a feedback as to how you view this acquisition on these three parameters.
So, Bharat, if I were to take it, I think that's a very good question, and I think that's the right way of looking at things. But when I look at the last question, you see there are certain characteristics which are there in pharma, which come from different platforms, which come into play. From a competency building capability in terms of technology, that's in chemistry or non-chemistry based, enzymatics or others, is something which we believe we will be acquiring, and I think there's a crossover lever which could play there. Third, it is also opening a larger canvas, is the other part of it. In the complementary sense to what we already know well is chemistry and process. Fourth, it's a highly regulated and compliance regulated environment, which PI is well versed with and works in that framework. So hence, for us to move up the value chain and handling that into pharma, it's something we believe can be done well. Fifth, clearly the growth path which we have been able to see to be drawn is drawn from our internal strategy, which has been on the works before even looking at the acquisition, as we already had planned. So there is a synergy which comes, which is again complementarily backed with our own capabilities in R&D. So looking at these 3-4 pillars which integrate well, this made the right fit sense to make a step and then to say how we can find other things to make them jump. So that's really where we are right now.
Which means we believe that what we are acquiring is making eminent economic and strategic sense. It will add value to what we are doing, and we'll be able to enhance value, and therefore it will be like a triple one combined together.
Yes. So as like you said, we're not looking at this as a 1+1. We're looking at a bigger number to that. Is equal to 2. Now that's not the answer. And its acquisition of business is just not only purely for financial terms and conditions, but it's also for acquiring competence and capabilities and technologies which become a multiplier, but they may have a longer gestation. As you can see that today we've been able to evolve in the agrochemical business from mere generic producer to marketeer to innovative product selling to custom manufacturing today to become an innovator company to generate new molecules at the global level. So that's it. And again, lever that to the partnership by acquiring, building, and creating IP. That's really how we've gone about. And the same kind of philosophy we are applying here, but in a differentiated model in the pharma space, where the canvas is big and the pharma world is more matured and open to such kind of platforms of play. That's really where we are targeting. And expect that to definitely give us more than 1+1 to 2.
Thank you, Mayank. Second question is on the human talent pool. As an organization, I think we are working on more advanced chemistry than before. We are working with more sophisticated customers than before. And now we are adding more verticalization by adding pharma. And even in terms of the size, organization has come some way from where it was. And all this will mean that human capital, which is at the core of what we do, because we are not in a business of commodity chemicals, we are in the business of value creating activity. Our ability to synergize our manpower plans, attract the right kind of talent across the different areas, retain them, and create sustained excellence in organization. What are the quotes on that?
Sure, sir. I'll answer one part and then maybe I'll ask Raman to step in. As a part of the strategy, we work at. If I was to answer specifically in the right now, we're already looking at accumulating talent in the pharma space. We already have the R&D and the HR leadership in place to do that. We're already in the process of looking at leads. Internally, we have Dr. KVS, a couple of other people who come very strong and well versed in the pharma play, who could be directionally giving, and under them we'll get the leaders to drive and put that business. On the other hand, in the CSM, we've been able to build those kind of verticals that are there. In the ag business, we've got the 2 leadership in place. And now we are steering to the next step where we are working in a program where we are looking at creating the next operating model for a multi-engine organizational growth by putting a differentiated structure and putting them with the right skill sets and then aligning them to create a larger purpose of the organization to go to the next phase of growth. And these are parts of steps of changes as you grow from one to the other. You need to plan, and that's probably why you will see that there has been a huge investment in the HR front, which is reflected well in Q1, where you will see the human capital costs go up because we've acquired talent. We're grooming them to go to the next phase, investing in that, and then building the next team to go to these multi-engine large frameworks of work. Yeah? So clearly this is a top priority in the organization, driven at an objective level, and we're directionally in that manner. And maybe, Raman, you can bring in to give a few more bullets of highlights what you're trying to do in there. Raman, you are there?
Hello.
Yeah, you can be heard now.
Yeah, Mike. Thanks for that. For giving me the opportunity. So clearly, this is an area which has been very high focus in the last 12 to 18 months. Knowing clearly that we are going into the adjacency of pharma, we are going to have technology as the core driver of both the pharma and the custom synthesis business. So there are 2 approaches. One is identifying and developing internal talent, and here we have external facilitators who are helping us to use formal well-tested tools to identify potential talents and also invest in them to, really grow future leadership at multiple levels within the company. And of course, then there is also a very clear strategy which is acquiring talent from outside in order to fill the gaps of new kind of skills and new competencies that the organization will need as we move into this growth journey, which is technology based and then growing into adjacencies. Yeah. So that is in summary the approach. Just to reiterate, that tremendous amount of leadership time is spent on this, and we are also seeking the efforts of the best of the outside the organization to help us in this process. The second part that Mayank alluded to, which is a larger transformation that is happening, which looks into how the organization should be designed in future in order to not only grow the existing business, what we call as the deliver the current agenda and develop the future agenda. So those would be the two broad areas of addressing this very important talent need to drive the business at these very high growth rates.
Where do we stand in that journey as we look at within?
So in that journey, 18 months ago, we started the whole process of objective assessment of internal talent. So we've kind of, assessed more than 300 internal talents, identified, talents that can potentially have leadership ability and potentially have learnability, whether they can, go and learn higher skills, etc. And we are now investing into developing them. The acquire talent strategy is something that's an ongoing process, and you will probably see the results of that over the next maybe 3 to 6 months' time.
Excuse me, this is the operator. Mr. Shah, may we request you to come back in the queue for a follow-up, please? Thank you. The next question is from the line of Ashish Naik from Axis Mutual Fund.
Hello, sir. Just wanted some bit of more clarity on the two novel molecules that we have highlighted in the presentation. In terms of the timelines, as we mentioned that we are in the development phase, so at what level are we looking to partner with potential innovators? And second, in terms of when you say that this is a high, the potential market opportunity is big, which are the markets and end segments that we are looking at, and if possible, some level of understanding on the potential size of these molecules. Also, just one more question. In general, what is the strategy on novel molecules? Are we going to keep developing more such molecules? And if yes, would it be largely related to agrochem?
Clearly, I think to answer your last question first, yes, that's the core competency we built, is the ACT, which gives us a unique platform to develop our own products and molecules. Each product comes with its own global landscape in play. Yes, the partnership approach is what is going to be applied to this here from a development purpose. So your question to what is the time scale, you could see some of these phase into 4 to 5 years before they really hit the market. Yes, the opportunity size in this are more of a part of the development activity, evaluation process. Which size, what segments? These are pretty fairly well-versed segments, as this was the first time we entered, so we've taken a cautious call to where we want to play. The segments are pretty large in large geographies of the world. Right now, we are under various evaluation stages, and that's what we call the development phase. And I think we can come to a more mature understanding of this over time of a few seasons across the globe when we get some results. And that's really, and we are looking to partners starting at this stage to the commercialization stage is where we start talking to partners for the purpose of partnerships. Yeah.
So would it be fair to say that we will probably look at a partnership maybe if the commercialization is 4 years down the line, maybe after a year or so?
Sure, yeah, somewhere around that.
Understood. Great. That helps a lot. Thank you.
You know what, you have to start, some of these things, you have to start dialogues, various evaluation processes, things work around. Unfortunately, but the reality, and that is the fun, it's a 10-year journey. We are only 6 years down it. And with another 4 to share. And we are happy that at least 6 years down the line, we have babies which can actually become adults, hopefully. Right? First was producing the babies, as I put in simple terms. And now obviously we have to now nurture to decide what are the best skill sets after we put them to test.
Thank you. The next question is from the line of Sumant Kumar from Motilal Oswal. Please go ahead.
Yeah. Hi. So can you talk about the electronic, chemical, and other specialty chemical opportunity? You have mentioned in the PPT you have initiated relationship with a new customer. So can you talk more about the segment?
Clearly, as a focus in the fine chemical area, we have talked to a couple of customers, and I'm happy to say that this quarter we are commercialized small batch production of these chemicals in the end area of application. That's where we are, and this again is one step towards looking at another part of the canvas for growing our competencies. While the skill sets are differentiated complementary between pharma and ag, a combined skills of those create a different play in that space from learning the skill sets, and we've also entered that. So over the next 3 to 4 years, we'll anticipate to learn them well. Then, as we look at scaling up, it is the next journey.
Can you talk about the domestic business, so the outlook for coming quarters, how the business is shaping up?
Raman, would you like to take that up, please?
Yeah, definitely. So let me give you a very quick Q1 situation. So the market in itself, due to some delayed rain, there was some parts of the country where there was some delayed planting. In comparison to last year, same quarter, when the distribution channel, out of fear of supply chain shortages due to COVID lockdown, etc., had a very high propensity to pre-purchase. This year, we also found that tendency to pre-purchase wasn't there. So we believe in the first quarter, the market probably was slightly flattish to, maybe a low single-digit growth. So our own performance, the two pieces of domestic business that we have, one which is the PI distribution business, and then the other one which is the Jivagro, which you also saw in the investor presentation, the new company that focuses on the horticulture. So the PI last year had a very, very high growth base. So the first quarter, the growth was almost about 34-35%, if I remember. So on that basis, the growth this year we had expected, there would be pressures, and as expected, it is less than it kind of declined. But the Jivagro piece of the business actually did grow. It grew at a healthy 5-6%. So overall, I think our strategy is working. In the second quarter, we expect the business to kind of come back because the monsoon has kind of widely spread now. The demand is starting to pick up, although the western part and cotton region still are suffering, and if it does not rain in the next week or 10 days, we believe there will be some spray slots that is lost, which will depress the market, but we are still very optimistic. And in the second quarter, we will also be launching 3 new products. That also gives us, some options or opportunities for growth. So cautiously optimistic about the second quarter is what I would say.
Excuse me, this is the operator. Mr. Kumar, may we request you to come back for a follow-up, please? Thank you. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. First question, on the capex side. So our order book still stands at a healthy $1.5 billion plus, while the capex number that we are starting for is 3.5 billion or INR. So I'm going back to our earlier comments, probably a couple of quarters back, wherein we did mention the thrust and focus on the tech-led initiative, which can drive a higher asset turn there. So is it because of that the capex is slightly lower? And your thoughts there.
I think when you look at the capex, that's not linear, as I would say, to revenue, because as you were saying, on the lower end of the commodities side of the market, we enter multiple step high value. On the third area, as you would have seen, PI's own ability, from a process technology capability. Our teams have been working extensively to look at how we improve efficiency and throughput and creating more white space. And I must comment, the team has done a very good job over the last couple of years to create white space in the existing assets while reducing the capex and improving the asset efficiency. And that is something which is visible, as you can see, and will continue to get better. So it's not linear in nature, but it is getting, and we believe that how we're going to deploy less capital for more efficiency, that's going to be the philosophy. One, the technological and capability investments point of view. Third, by finding the right asset revenue mix play. Fourth, how they're not linear in terms of the asset requirement to the revenue play.
Sure, man. So directionally, we should look at a higher asset turn on the current existing base as well. Will that be a right understanding?
Yeah, because the investments, yes, and also there'll be investments which are going on the R&D phase, as you would say. So that could be the different way of looking at it, right?
Sure. And just second question on the pharma bit. I know you've mentioned, alluded to it earlier in the comment as well. But, from a portfolio perspective, now on the agri piece, we are largely on the innovator side. On the pharma piece, as of now, we are slightly more bent towards generic. And hence probably, higher working capital, lower asset turns, margin profile, et cetera, et cetera. What time frame do you think one should look at from, rejigging of this business, the pharma piece, and ramping it up to PI standards there?
So if I look at it, I would say re-engineering, I would say right side. One is taking in what it is, making sure it gets into a steady state and runs. So from time to that, I would look at 18 months because there's a lot that needs to be done to make sure it comes to steady state. Obviously, parallelly, we'll be working on the next level of play. And I would say in the next 24 months, we should have a clear picture of the way forward. And that's the steps which start to show up in 2 years. Basically, is what I've seen 24 months of total impact which is being created by PI to be visible. Yeah.
Excuse me, this is the operator. Mr. Periwal may be requested to come back for a follow-up, please. Thank you. The next question is from the line of Aditya Jhawar from Investec Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my question is around, the InSwift acquisition. So, the last 5 years, the growth of the company has been about 5-6% CAGR. And if you look at asset turns, it has been relatively lower. So the question is, in the current, phase, if you look at the capex, the intensity in the last 5 years has been coming down. So what is the current utilization level? That is number one. If you have to break the next phase of growth into the growth in the existing business and the new line of business, so do you have some kind of line of sight and what kind of potential growth be in the existing business? Because maybe the capital, commitment was relatively lower than required. So if you can break up the expected growth in the current molecule, do you see what is the potential of growth and what is the kind of growth that is hinges on future success?
KVS, would you like to come in and answer that?
Yes.
Hello. Yes, we can hear you.
Am I audible?
Yes.
Yes. So, as pointed out earlier in the discussion, our endeavor is to first make sure that we have stabilized the entire product pipeline commercially and also from technology perspective. That's the first effort that we are looking at. And the second one is to really bring in the expertise of science, innovation and technology of PI and see how this can be leveraged into ISL. And through that, we will be able to step up the science, innovation and technology engine in a way where, it will come to the PI level and start adding value to this whole acquisition. I think that's how I look at it.
I think there was a question about the revenue growth rates and change in inventory. That's the other one which was there, how we're going to do that.
So these two things, in my opinion, should aid in the revenue growth and the way we see the pharma piece that is getting added up from the pipeline of PI. So I think there are three elements. Hello? Yeah. There are three elements which I want to put it across, which should aid us in the revenue line. One is the commercial excellence piece that we want to bring in through the product pipeline. Second one is the way we are looking at the entire pharma pipeline of PI together. I think that's what I envisage right now when I am looking at a synergy integration of PI capabilities and ISL.
Thank you. Excuse me, this is the operator. Mr. Jhavar, may we request you to come back for a follow-up, please? Thank you. We take the next question. Ladies and gentlemen, we take the last question from the line of Amar Maurya from Alpha Accurate Advisors. Please go ahead.
Yeah. So thanks a lot for the opportunity. Two questions from my side.
Your voice is not clear, Amar.
Clear now? Hello?
Yes.
Is it clear now, sir?
Yes. Yeah, it is better, but not very clear. But continue, please.
Yeah. So, sir, I have two questions. Number one is, what is the current utilization in case of InSwift? And secondly, a ballpark at a 1,500 crores of investment which we did, what kind of, when we can expect and what kind of peak revenue, we expect from this piece, given that, new investments will be just done for the maintenance. That is number one. And secondly, the current ROC is around 3% based on the current acquisition. So when we expect this ROC to reach at least to the company level ROC?
So, yeah, thanks for your question. So first question, current capacity utilization level is anywhere between 70 to 75%, okay, for different production blocks. Coming to the second part of your question, well, as I mentioned, that we will come up with, maybe more detailed plans, projections alongside the closure of this transaction. But yes, I mean, given our initial assessments and estimates, we would certainly look at more than 1.4 as the revenue growth target in next whatever 2-3 years time. In terms of return on capital or these kind of financial parameters, as we have already mentioned and explained in part, that over a period of time our objective would be to kind of improve our overall ROCs and ROEs of the company, PI. And therefore you can imagine that we'll be projecting to improve significant improvement in the current levels of these returns, and that will happen both ways. While on one side we will work on growing the revenue, improving the quality of revenue on one side, and on the other side we will also be working to significantly optimize the working capital levels, asset turns, and those kind of initiatives, so that the outcome is in alignment to our general return that we have at PI. I hope this answers your question.
Excuse me, this is the operator. Mr. Maurya, may we request you to come back for a follow-up, please? Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
So yes, thank you everybody for coming on to this call today, and we will continue to look forward for your continued support. And you may please come in touch with our leadership in order for any questions that you may have, and wishing you all a very safe times ahead to you and your family. Thank you. Bye-bye.
Thank you all.
Bye. Thank you very much. Ladies and gentlemen, on behalf of PI Industries Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.